Discussing a new essay we just published, The World Runs on Compute. We talk about productivity, we talk about the concentration of power that we expect corporates to go through because productivity will drive vertical integration. We talk about when software eats the world meets the innovator's dilemma. In other words, we explain what disruptors really are. Disruptors are companies that are able to use compute to solve business problems. They gain market share and dominate supply chains because they are dominant as productivity goes up if you can use compute. We talk about the implications of that. We call it the Libertarian Paradox. On the one hand, we want innovation, we want progress, we want upward mobility, all these things that come with technological innovations. But we also conclude that in a world where productivity is driven by compute and where compute is driven by Moore's law and actually accelerated Moore's law, we expect concentrated power to be the result. In other words, a few GDP-sized companies that have disproportionate amount of power. We suggest a solution. We call for a constitution for corporates. We talk about the implication for investors, and we also talk about the implication for society. This is an Not Even Wrong podcast. It's September 21st, 2023. This is Crim Delco. Since the last update, we're down 11%. The market's down 2%. For the year, we're up 118%. The market is up 12.7%. We're outperforming by 105.3%. We just published a new essay. The title is The World Runs on Compute. And we discuss actually a couple of dynamics here. This is first and foremost, of course, a work that concerns us as investors. You know, Orange Capital Partners is an investment company. Our purpose is to generate wealth by investing in fundamentally new concepts and engineering practices. So this is first and foremost what we care about. How should we deploy our capital? Well, this essay helps us understand this because we are looking for companies that can use compute and solve real business problems. And compute is across the stack. It's not just software. So this is not just software eats the world. It is compute eats the world. Compute means we go from the metal to the software and we interact. We mention a few computer architects, namely Bill Daly from NVIDIA, and also Ganesh, I can't pronounce his last name, I apologize, from Tesla, the Dojo architect. They talk about the importance of having flexibility across the stack and also adapt software to hardware, adapt hardware to software. So that's why we emphasize compute. So you have compute. This is our first point is that companies cluster around productivity. So we have productive companies working with other productive companies. And we flip this on its head by saying that it's not just that we have productive companies working with other productive companies. We conclude that you cannot have a supply chain where there is too much dispersion in productivity. Like we cannot have a supply chain where productivity dispersion is too much. This is not sustainable. Supply chains where that happens are not good investment objects. As opposed to that, what we're expecting is uniformity across supply chains. And this is driven by innovators. This is particularly driven by companies that can use compute to their advantage. This is the second point we're making, which is that compute is really going to drive productivity, at least in the first part of the 21st century. Maybe it has always been driving productivity. I don't want to go back to economic history and explain maybe why JP Morgan was so powerful, or Coca-Cola, or ExxonMobil. But at least where we are today, compute is what matters. And compute is across the stack, meaning, again, it is using the whole compute stack to solve business problems. Companies that can do that successfully will vertically integrate. They will dominate markets hitherto not conquered markets, such as transportation, namely Tesla, such as telecommunication, namely Starlink, such as aerospace, namely SpaceX, and so on and so forth. We expect companies like Apple, for example, to become car companies. We expect companies like Microsoft to become banks, educational institutions, healthcare companies. All kinds of industries that have hitherto been untouched by Silicon Valley will be vertically integrated. As a consequence of that, we expect very concentrated power. We expect GDP-sized companies to dominate supply chains, and we expect multi-trillion-dollar market caps to result from it. This leads us to the third point, which is the Libertarian Paradox. On the one hand, we want this freedom, this innovation, all of this is good because it creates upward mobility. It's the most ethical thing to do. It's the best for society because it opens up options, it opens up wealth, but it's also going to create massive, massive power. This is the Libertarian Paradox. And we offer a solution, which is the fourth point. We call for a constitution for corporations. A constitution along the lines of the United States Constitution. The United States Constitution is a document that was written not with a goal. It was not a business plan. It was not a blueprint for becoming the most powerful country in the world. It was written in a way so that power can be exercised when necessary, but liberty can be preserved. If there's one thing that the founding fathers achieved to do, it's exactly that. So on the one hand, we needed concentrated power. We were fighting the Brits, we were fighting all kinds of, the Spanish, and later on we had a civil war and all kinds of stuff. So we needed executive power. We needed almost dictatorship type power that we still have today. The presidency of the United States is almost a dictatorship. However, there's checks and balances, there's things in place that make this whole situation less convoluted and more directly driven towards progress, towards freedom and liberty. And that's still today, even though we have a lot of problems and the Fed is the biggest problem here, but we can still say that we've been able to preserve it. So we call for a constitution for corporations. In this particular essay, we don't discuss this more in detail because I think this warrants a whole new essay, actually a whole new work and a seminar. And I think we should be calling people from various fields, from the law, economics, from technology, to discuss this. The fifth point we're making in this essay is the implication for investors. So now we're going back to our purpose, launch capital partners. The reason we're doing all this, writing these essays, discussing them with our customers, with our peers, with anybody actually who's interested in discussing, and I invite people to comment on this podcast or comment on our YouTube channel or comment on our website, wherever you find us, comment on us. This is not, of course, a solicitation for investment. It's not investment advice. Please do your own work. But we welcome a discussion, and the discussion is about investing. You want outsized return, follow the compute. Follow the compute. It's the compute, stupid. Compute is going to make you money. Compute is going to generate outsized returns because Moore's law, acceleration of Moore's law allows for exceptional growth, exponential growth. The sixth point that we're making is sort of a societal call, a little bit of a point of caution also. What we're saying here is that we want to preserve innovation, prosperity. We want to preserve this dramatic increase in productivity that we expect come from compute, but we also don't want society to turn against disruptors. We offer a very simple formula, which is total wealth created by disruptors has to be at least 10x from the incumbents. We also say that total wealth created should be separated in wealth preserved by the shareholders of the company, and the rest of the wealth should always be larger than what the company makes. In other words, if Tesla generates 20 trillion in value in the next 5 years, then we should only make maybe 2 or 3 trillion as shareholders. The rest should go to society. This is roughly the way we think about this. As shareholders, we're happy to share with the rest of the world, but we also want to be compensated. We want to be compensated handsomely because it's very risky what we do, and we put our capital on the line, we put our livelihood on the line. So we don't want to just be compensated with some sort of inflation plus type, cost plus type situation. We want to be compensated fairly, and fairly means well if we take the kind of risk that we're taking. Risk in a sense is, of course, with computation, the risk is mitigated. We talk about this, we talk about iteration, we talk about the low cost of iteration, the cost of error correction. We talk about all these things. These are things that we've discussed in the past, and we bring them back up because that is the key of productive disruption is iteration. Iteration is driven by cost of error correction and errors, making errors. And if you can do it in virtual space, i.e. through computation, then you can make it at very low cost and then take prototypes or whatever you come up with in the virtual space and then build it in real space. This is how we expect, let's say, Tesla to continue to succeed in material science problems, or Starlink to make better satellites, or so on and so forth. So to summarize, this essay, The World Runs on Compute, is really a couple of things. One, it's an investment thesis. It's an economic theory. It's also a call on society, a cautionary call on society to deal with the libertarian paradox and to find a solution, and also to preserve, which is the most precious thing, which is the human ingenuity and the ability to grow prosperity and to grow the opportunity set, the optionality of society, which is, according to David Deutsch, what wealth is. It's the set of possible transformations, because that opens up opportunities for everybody. This is the most democratic way to organize society, and it is also the most fun way. So we have to make sure that the concentrated power that results from that doesn't destroy the golden goose. Thank you.